Hi there, traders. This is Brad Gilbert with the FX Market Insight for Friday, the 2nd of August. All right, now, if you're just tuning into the markets, what you'll see is if you come to a lot of the news pages, they are littered with Trump. Right? He's come out with basically new plans to add more tariff to China. It's on every news service, every page, all over the place. And the ramifications for that is it's hit the Latin American markets, it's hit Aussie, Kiwi. It's really debunked a lot of what the Fed was trying to do. In actual fact, that actual Fed rate cut was actually because of Trump, right? Not only putting pressure on them, but because of all these trade tariffs, it's upsetting the natural sort of balance or equilibrium of the global markets, global growth. Everyone's talking about this, and that's really screwed things up. So it's actually such a pain in the backside. And regardless if you like Trump or not, as a trader, he's a dead set jerk because he knows what he's doing. It's just disruptive. It's disruptive to everything. Now, the other major sort of news out there, the Bank of England came out with just dropping their growth forecasts ahead of Brexit, and that's something else we have to manage as well. So what does that do for us? Now, let me just wind back the clock sort of 24 hours and you have a look straight after the Fed. We have very sort of clear trading conditions. You got trending markets. It's looking gorgeous, right? Now you throw in the Donald and it's starting to look a bit more like this. Okay, this is how I see the dollar. The dollar pairs are completely disrupted, especially on the short-term basis. A lot of them are back drifting sort of sideways. There's no sort of natural flow across the board. On the bottom side, funnily enough, the geopolitical side has sort of really firmed up the Aussie and Kiwi. So their downside still looks very good because the impacts of the China tariffs is negative for Aussie and Kiwi. So it goes with the natural trend. And then you sort of look at the other external event. Brexit is just its own sort of event, which is all negative. It's all sort of down. You throw on lower growth rates from the Bank of England, goes with the negative sentiment from Brexit. So that's why sterling has maintained its stance. And then you come back to the last one there, euro. Euro is looking extremely weak. But on the hourlies, okay, the short-term sort of disruptive noise chart, it's back in the range. Now, I still think selling euro back towards 111 is a really good idea. Weekly and daily charts is down. The sentiment from the ECB is down. But what we've got is just this disruptive stuff. It's the shock and awe that Trump uses. We've seen it so many times over the last sort of 12 months where he comes out, threatens all sorts of stuff, and then slowly backs down or walks away from those strong talking remarks. So basically what we've got is a situation now where the Fed, the hawkish sort of sentiment from the Fed is gone for the moment. And we're back to China and the US trade situation as the main driver, right? And once again, you just don't know when. Well, we generally know when Trump's going to say something. It's during the North American session, so he gets maximum airtime. That's what he wants to do. He's not going to say things when everyone at home in the US isn't watching TV. So what have we got coming out? You just got to watch these upcoming events and work out which pairs it's going to work with. So to me, the Aussie and sterling, I should say, are the two best pairs. And we do have some upcoming releases which could give these things a nudge on the downside. And that's what we're looking for from the data. A push to the downside, get the price action moving down again. Of course, as we come into the end of the week, the major event is obviously the non-farm payrolls. Now, Trump's antics, it's good it's out in the open, the whole thing. The next big move in the dollar is going to come from these US employment numbers. They are at record levels, right? Can they keep sustaining that? I'm not sure. I don't think they can get much better. So, you know what? I think the sentiment from the Fed, the strong dollar to me is going to come back in once the initial input of this Trump stuff is done, right? His comments about adding more tariffs to China, et cetera, screwing up global growth. Once that's on the table, it's put into the market, now we can come back to trading the dollar. Now, this is going to be a pretty good opportunity. So the next big move across all major pairs here is going to come from the US non-farm payrolls. Strong dollars, we're going to see all these pairs drop, and we're going to see all the dollar pairs rally. Now, when I say all the dollar pairs, just keep a very close eye on, obviously, dollar yen and dollar Swiss. The safe haven trade is back in vogue. Dollar Swiss hasn't gone as far because it's, Euro is so negative that the Swissy can't go too far. But dollar yen had a real good clean out to the downside. So when we come back to looking at strong US numbers, which pairs are going to be probably going to feel it the most? Probably dollar CAD. Okay, we did see oil drop about $4, right? And I'll show you the charts in a second. That goes with a stronger dollar CAD, right? So stronger US numbers, I would expect these four pairs down the bottom to drop, dollar CAD to rally. Obviously, the dollar index would rally, and probably a little bit of dollar yen, dollar Swiss, but not as much as dollar CAD. Now, if the numbers are weak, what happens? Well, we're going to see the hourly charts here turn up, and we're going to see the dollar pairs go down. So maybe, you know what, weak numbers, concentrate on dollar yen, because on the short term, it is going down. On the daily, it's sort of down, but it's still within the recent ranges of the last couple of weeks. That's why I haven't put it down. But dollar yen probably looks like the best dollar pair to be trading on the downside, maybe even a bit of dollar Swiss, and you should see those other pairs rally. So to me, it's a pretty clear-cut situation. Looking at your charts, this is what we've got to look at. So you can see that the sort of move here. Now, to me, we've got some good levels to be getting short some of these pairs, or levels. If the US numbers are weak, well, good levels to get into some stop losses on the top side, some stop loss moves. Euro's got a level here around 111.0510 and also back to towards 111.40. I still like it down. Everything's bad in Europe. This is just Trump, as I said. Sterling, well, you know what? You take out Brexit, this is a beautifully trending currency at the moment. But Brexit is such an anomaly that it could end up back up here in a heartbeat. But everything's suggesting it keeps going down, so keep an eye on that. Now, dollar CAD, it missed a bit of a clean out on the downside as far as Trump was concerned. You can see it's sort of rolling down here initially, but it started rallying because the move in oil, right, went from 58 back to $54, and that's going to put more pressure on the top side than the downside. So that nullified the whole Trump, or the Trumpinator, as we sort of like to say. And there's the clean out in dollar yen. You can see it breaking down through the cloud and that support trend line. That was the clean out. And now, funnily enough, where's it stopped? Where those it started to get some traction around those other support lines on the downside. So that's where we are, guys. It's not, to me, it's not happy trading when, you get something out of the Fed, which is the main event for the market every sort of 6 weeks. You get clear markets, okay, like we had here yesterday, and that should be in the market for at least almost a week, right? Really good trading conditions. But then you get Trump coming out, and this is what we end up with. It's an absolute travesty, right? Especially the dollar pairs. I mean, look at that. That is an absolute joke when you compare the opportunity from yesterday. So, but that's, you got to put that by the by. Focus on the key opportunities that are coming out. And to me, it's the pairs down here that do look really sour. Euro looks negative. Obviously, Aussie as well. To me, and obviously Sterling, you probably want to start looking at the crosses, right? Take the dollar out of the equation. Look for the pairs that are a little bit stronger, which there's not many of them at the moment, but try and isolate the Euro, Sterling, and Aussie crosses, and particularly maybe the Kiwi ones as well. Look for opportunities there, and that might be where the opportunity are. If you looked at the yen crosses, obviously they'll be through the floor, but it's a little bit late to be looking at that. You've got to plan ahead, right? So that's where we are at the moment. Not a lot of joy, but I tell you what, it's going to be an exciting release, the US non-farm payrolls. It always is, well, I say good fun. But if you're looking at the numbers, now for those traders who are sort of just coming to this quite new, now I know there's a lot of people out there sort of, beat their chest and say, I trade the non-farm payrolls. I generally don't, because it is an absolute beast. Now, why is that? You've got the non-farm payrolls itself. You've got the unemployment rate. You've got the average earnings. You've got the participation rate there as well. And then there's a whole bunch of other things, private payrolls, manufacturing, government. There's so many releases here. It is hard to work out sometimes what's going on. The core number they look for is the non-farm payrolls. Then you're looking at the unemployment rate, which is almost at historical lows. And then keep an eye on average earnings. They're the three key ones. Now, if they all line up, as I said, whether they're strong or weak, that's where the move's going to come from. All right? It's not exactly an easy trade because you've got so many things to look at. And what can often happen is if we get, so the non-farm payroll's up, and and the unemployment rate blows out a bit, well, they nullify each other. You get a whipsaw action in the currency, and then it starts trading sideways again. So not exactly easy, but I tell you what, you want to be watching it either way, and keep an eye on your charts, because the best pair to be trading is the one with the best technical setup. All right. All right, guys, that's it from me. Have a good trade day. It's Non-Farm Payrolls Friday. Good luck. Cheerio.